Welcome everybody. I'm John Haig. I'm the co-director of the Mosava Rahmani Center for Business and Government. It's great to see a few of you here in person. I know we have a number of people online. Uh, we are very fortunate today. We have with us Shlomit Wagman. And I have a long number of things to comment on here. First of all, she was for a long time a government official in the Israeli government. Her expertise is really in the fields of combating money laundering and terrorism financing, cryptocurrencies regulation, privacy and data protection, financial intelligence, and data analytics. She happens to be, the most important title from my perspective is she's a research fellow here in the Mosava Rahmani Center for Business and Government. But a little more background. She was the Director General of the Israel Money Laundering and Terror Finance Prohibition Authority, IMPA. And she was a financial regulator in the agency from 2016 to 2022. She was acting general of the Israel Privacy Protection Authority, PPA, from 2019 to 2021. She was head of the Israeli delegation to the Global Financial Action Task Force, FATF, which came out with a report recently, which I don't know if we'll get into that at all or not, but potentially. The Global Money Laundering and Terrorism Financing Watchdog. And she also co-chaired its operational working group, was a member of the steering group, and was a nominee to be the presidency of the FATF, which, as in many of these types of situations, politics inevitably play a part, which I will leave it up to her whether she wants to discuss that or not. She also was actually a lawyer at Wachtell Lipton, which I happen to know very well. Wachtell Lipton was the law firm I used when I was at AT&T and was doing a lot of details. They are, in my opinion, probably the best merger and acquisition law firm in the country, possibly the world. And then she was an adjunct lecturer at Tel Aviv University and Reichman University, fellow at the Information Society Project at Yale Law School, and she has a JSD and an LLM from Yale Law School and a joint LLB and BA from Hebrew University. She clerked for the Supreme Court, Chief Justice of the Supreme Court in Israel, and I will pronounce it incorrectly probably, but Aaron Barak. So I would like to just say also, we're fortunate that Shlomit here. I want to thank Hal Jackson, who helped from the law school, who helped bring Shlomit here as well. Today's topic is one I actually have been waiting to hear about for quite a while. And the title is Regulating Cryptocurrencies, the Case of Money Laundering and Terrorism Financing Regulation, and What Can We Learn from It? And I don't know how many of you read Wired magazine, but I don't know if you saw the cover of Wired magazine this week. Caught by crypto. They thought their crimes were untraceable. They couldn't have been more wrong. The shocking case that shredded the myth of Bitcoin's anonymity. And I am very much looking forward to having Shlomit educate us about why that is probably so true. So anyhow, thank you, Shlomit, for coming, and thank you all for coming.
Thank you very much, John, for this generous introduction. I truly appreciate that, and your hospitality here at the Mosava Rahmani Center. And I would like to also thank Professor Howard Jackson at the law school for all his help and support. So indeed, today I'll be seeing the presentation. Is it possible? Okay, great. Okay, so we are going to speak today about cryptocurrencies and those walls. Now, my perspective is coming from a certain field, from money laundering and terrorism financing challenges, because this is one of the most urgent problems that the global community was facing. However, I think that my presentation here today, my talk today, is actually much broader than that, because we could look at this situation as a case study, the preliminary, the first perhaps regulation that was widely imposed on this field, and try and see what we can learn from this experience so far and going forward. Perhaps to start, I think that the overall blockchain economy or financial technology is here to stay. I think that we're seeing these days the early stages of this entire industry. Perhaps to compare that to another technology that we all know, the cell phones. At the beginning, at the early days of the cell phones, we had this large, huge box that its main purpose was to replace current service that we consumed, namely to get phone calls. It gave us more flexibility in terms of where we are located, but that was basically it. Today, years after it was introduced to our life, it changed completely the way in which we operate, act, interact, and changed the entire society. I believe that blockchain economy is going to be developed and change our life in a similar manner. We cannot even now predict how it is going to change everything, but everything is going to change the entire economy, the interplay between financial institutions, large banks, society, private entities, and the entire society is just going to change and change the balance of powers and change many things in our society in unpredictable way. And from this point of view, I'm starting my lecture because I'm looking now on a very limited perspective of current situation of blockchain, but knowing that this is going to dramatically change in the future, and we will have many other channels with less intermediaries, and in many ways that is going to change our society. So indeed, one of the most interesting ways to look into this topic is the anti-money laundering and combating of financing terrorism, AMLCFT. This is the acronym that I'm going to use in my lecture. And this is indeed one of the first industries that gave a solution to this problem. I think that the main reason for this very prompt solution or very prompt regulation that was imposed on this aspect was the fact that first, there is a global, very strong and dominant organization in the field, the Financial Action Task Force, the FATF. And because there is a dedicated global organization that is really focused on this issue, it's very updated, it always consider and examine the changes, it was able to provide solutions, a quick solution to the entire topic. And while in other aspects, we don't see such a rapid development. In addition, in the AML and CFT economy, it's a very prominent problem because criminals and terrorists are not waiting up until countries will set up regulation. They're acting very fast, and I'll show you some examples in a few minutes. So the response has to be made very quickly and very efficient. In addition, and this is a very interesting phenomenon, we've seen that there was a huge demand from the private sector to have a rapid regulation. And why is that so? Because on financial markets, there is a network effect. And players would not like to interact with other players if they are not regulated, or at least in the same manner that they are acting, because otherwise they may transfer the risk to the other party. And therefore, there was a lot of pressure from the private sector to come up with solutions that will allow them to compete and to act in those fields. So I'll try to start by explaining in a very brief few minutes a little bit about the AML and CFT regulation, so we will be able to better understand how it is going to be imposed, or how it was imposed on cryptocurrencies, and then to understand what works and what doesn't. So first, the FATF is the organization, a very strong organization, very prominent organization, which is combined of approximately 40 countries. It was established in 1989, and since then it's been changing its standards very rapidly, and it's imposed the standards on 205 countries and jurisdictions. This is really impressive, and they have a very strong capabilities, because countries who are not comply with those standards are being subject to very severe financial sanctions. And no country wants to be in that situation. So the FATF, in a nutshell, I think that this is probably going to be the fastest explanation that one can ever give on the overall financial regulation that applies on the AML and CFT regulation. is basically the approach that in order to combat crime and criminals and terrorists, you need to follow the money. This is the most efficient way to actually destroy their infrastructure, to stop their activities, and to preserve the integrity of the entire financial system. In order to do that, they changed dramatically the legal rules on the financial regulation approximately 30 years ago. That includes abolishing banking secrecy, changing privacy, transparency, trust regulation, and many other ways, which we will not discuss today. One of the most important elements in this regime is that the private sector has a very important role. Private sector, namely financial institutions, must know what their clients are doing to be able to know them, to recognize them, to understand their activities, to monitor this activity, and if there is any suspicious of illegal activity, they need to report to the government, report to a dedicated agency, which called Financial Intelligence Unit, FIU, and let them know that there is something wrong. Each financial institution conduct a whole set of procedures and compliance, sorry, in order to be able to do that. This is the KYC, know your customer, CDD, customer due diligence, and other acronyms that some of you may have heard of. This information is being provided to the FIU, which is able to see all the reports, all the reports that are arriving from many financial institutions, and combine everything into one big picture. And I always like to show that this picture that you see here is actually a network of terrorist organization that was revealed by my agency, by my FIU. What you see here is actually a network of terrorists that were funding the organization, and the Israeli government was designating those organizations as terror organization based on this financial analysis that was provided based on the reports that were provided by the private sector in Israel. So back to the global standards. So we have the private sector has a key role. This is mainly banks, insurance companies, credit cards, and so forth. Also, the country must have a supervision structure in place. They need to develop financial enforcement mechanism and be able to cope up with this entire system and to create an ecosystem of compliance and network effects. This entire system, together with the fact that all countries are subject to international evaluations that may put them on blacklists, on certain blacklists that will actually harm their ability to work on the financial environment and the economical global environment, caused to that there is a very strong ecosystem of compliance. And all parties, most of the parties do not like to get into their way non-compliant parts that may infringe their own risk management set of procedures. So with that, we'll actually go into the cryptocurrencies. About a decade ago, the cryptocurrencies started to be around. And of course, there is a lot of risk associated with cryptocurrencies when it gets to money laundering and terrorism financing. For example, there is a high level of anonymity. I'll speak in a bit on how much anonymity actually exists. There are many cash-like characteristics of these activities. There are no borders, so everything is actually cross-border. There is no one entity that can actually supervise and overlook on the transactions and get those reports and work with them. No face-to-face interactions, which caused additional challenges. There is a huge potential of sanction evasion or evasion of designation listed terror organization list. And there are many challenges in actually put your hands on those funds because they are not necessarily in your country. It's very complicated to seize them, to confiscate them, and so forth. And to add to that, the field develops very rapidly. We have now the NFTs, the DeFi, Lightning networks, and more. So it's very difficult to cope with all those challenges and issues. And indeed, we see that criminals and terrorists are very early, tend to be early adopters. During COVID, for example, not only us, worked remotely, but we've seen a huge increase in in cybercrime and in general crime that was conducted by cryptocurrencies, because they also moved to work from home. It was more difficult to conduct other crimes. We're also seeing many terrorist organizations that are actually finding a way to fund their activities with crypto. You can see here Hamas wing, you can see ISIL, all of them are actually providing their wallets in order to get funds from their supporters, and they're doing that in many additional ways. So in order to cope up with those challenges, with those risks, the FATF has started to work on that in 2014, and actually provided some key definitions in starting to mapping the problem and to see how to deal with that. Along the years, in 2018, they actually changed the standards. In 2019, it was imposed already as part of the standard that the entire AML and CFT regime is going to be imposed on cryptocurrencies. Now, when we know in our background that it's a very strong organization and that when it imposes its standards, most countries are in compliance with that, we see all of a sudden, overnight, almost overnight, many countries that actually have to cope up with these new standards and put the regime into their internal domestic regulation. And what that includes. So the standards that were imposed are first defining what is virtual assets. They chose specifically and in purpose the term virtual assets in order to be as inclusive as possible. We wanted to make sure that we're covering every type of digital assets, cryptocurrencies. They're not getting into the question whether this is an asset or a currency. It doesn't matter. As long as it has the ability to transfer value, then it gets under the virtual asset definition. In addition, we were looking at the FATF, we were looking at the relevant intermediaries that are operating in that field, similarly to the other financial arenas. And there we're looking on VASP, financial asset service providers, those cryptocurrencies platforms that are providing services. And it is important to remember that a tremendous amount of the activity on blockchain is being conducted through those platforms, because we have a problem of trust at the the blockchain environment. One party is not does not necessarily know who the other party to the transaction is. It is irreversible. So if you don't have trust, you must find some sort of mechanism to work around that and to actually transfer funds in certain situations. And we see a lot of activities that is being conducted by those virtual asset service providers. So we were looking at those entities as the relevant point to ask to impose the regulation with. They're equivalent to other financial institutions like banks, like money service providers, insurance companies, or any other service provider. And those VASPs have actually the exact same obligations as any other entity in the financial global markets. And again, they were asking for it, not to say that they were begging for it to be imposed on them, because without that, no other, most of traditional financial actors did not want to interact with them and allow them to transfer funds into the system. So basically, the imposement of the FATF regulation on VASPs include the same principles. They need to know the clients, they need to conduct CDD, to ask their clients for documentation of their identity, to verify that, to conduct risk assessment with respect to their clients, to think whether they are PEP, politically exposed persons, whether they are clients of high risk or not, and then to monitor their ongoing activity and to send reports to the Financial Intelligence Unit when relevant. Now, that brings all of a sudden a lot of information into the, up until then, very anonymous environment. because all of a sudden, if they want to work through those platforms, to those VASPs, they must provide the personal information, some identifications in order to provide this information. Now, many people start saying, well, so what? I'll just work around that and I'll take all the services from a different platform. But then we're getting into a problem. Because as I mentioned earlier, at the financial markets, we have the network effect. It is very complicated to get funds to be transferred to you if the other party to the transaction, I mean, the other financial institution or any other counterpart is not under regulation. Because if that party did not conduct all necessary regulatory package, the AMLCFT package, if it was not conducted properly, then the entire risk is being transferred to the larger institution, and they wouldn't like to accept that. So we've seen many situations, and I'm sure that many of you are familiar or know people that had cryptocurrencies, but they were never able to actually meet with their money or actually cash that out because it was somewhere over there, changing value very rapidly, but they were not able to convert that into fiat money, into US dollars, Israeli shekels, euros, and so forth. Now, once there are actors that are working under this regime, then all of a sudden it becomes a different game because we have entities who are legitimate financial entities that are able to play ball with traditional financial institutions. And then it is possible to conduct business and also to cash out those funds. However, it is not that simple because it is not possible to just take the AML-CFT regime in its entirety and impose that on a different field, which has a unique technology behind it. And therefore, we needed to implement some changes and some amendments to these activities. For example, we imposed a very low threshold to ask for those identifications because actually almost every transaction is an international transaction. So we looked at a very low threshold of €1,000 or US dollars as a trigger to ask the client for identification. I heard that in Europe, they have introduced that into their legislation last month, and there is a lot of criticism on how come the regulator is all of a sudden asking us this regulation, but this is the reason, because this is a high-risk activity. In addition, in traditional economy, we have the SWIFT. When you are transferring funds, when you are conducting a wire transfer, each financial institution needs to provide the other side with certain information on the originator, where the funds are going, the beneficial ownership, and so forth. And here in the crypto world, we have a problem because we need to find a way on how to impose that. So similarly to the SWIFT, we've introduced the travel rule, and we've actually designed a set of rules that will be adapted to the technology of blockchain and in purpose. The FATF made sure not to impose the specific protocol, the technological protocol on the travel rule, but left that to the industry to develop. So the industry is now working on developing the travel rule. And what it actually provides us that in every transaction, there is a transfer of this data between one VASP to the other. If you want, I can show you later how this actually looks like. And we see actually that there is a lot of information that is traveling with a transaction. So it will not appear on the blockchain. The blockchain remains anonymous. It remains neutral to the general public. However, law enforcement authorities, when needed, can have the access to the information, and they can unreveal that and go after the bad guys if needed. Now, we did a similar move in Israel. In the past years, I was the one who actually led these efforts to regulate the virtual assets. Already in 2018, we introduced into our legislation a very broad definition, technology neutral, on digital currencies. And later on, we actually imposed the entire regime on VASP. We've included this entire package and all the obligations that I've mentioned to know your client, to report to the FIU, and do all the monitoring that is required. We've also provided a warning to the public about unlicensed platform or platform that did not apply for license, such as Binance. I forgot to mention that one of the first requirements is to be subject to registration or licensing in any jurisdiction in the world. And we've also started to receive many reports from those actors to the FAU, thousands of reports, which actually helped us to unreveal and expose many interesting cases. I'll show you in a minute. And we've also needed to do another thing that many people are forgetting about, but this is actually to make sure that the team that is trying to work on those issues actually is able to understand the crypto world. For example, I asked my entire team at INPA, in my authority, all of them, from legal counselor to analysts, to be trained for cryptocurrencies analysis, because I believe that this is a whole new different language, and you must understand that in order to cope up with the challenges, even if you are not the analyst that is actually doing the work. We provided with the private sector a lot of red flags and indicators that will help them to understand when a transaction might be suspicious. And it refers to many parameters, for example, the size or frequency of the transaction, the patterns that may be irregular, the way that you are conducting your businesses, if you're using a higher anonymous currency, for example, or if by using the technology, and it's very important to mention that the platforms have a very advanced technology that allow them to actually map and see generation back, because everything is open and available on the blockchain technology. We can trace back years and generation back of activities, and we've asked them to look at the patterns and see if there was any at any time of the use of those currencies or the transaction, anything suspicious with that, something that is very easy to find, and there are many indicators for that. And for example, some of the investigations that we've conducted revealed interesting results. So first of all, we've been using the technology in order to cope up with the blockchain technology and the risk that is imposed, and it's also an advantage to law enforcement authorities. For example, this is I just took like from in the previous months, some activities that law enforcement authorities conducted around the world. Let me look a little bit about the Israeli case. So here, for example, is a case which my unit revealed. Here we see that someone tried to transfer funds that their source were illegitimate, and immediately after bringing them in, it was immediately transferred to many different wallets and went through very different mixers. However, at the final stop, when the criminals wanted to meet with the funds, when actually want to cash them out, they had to do the move between fiat and crypto to fiat. They need to meet the real world. And over there in those VASP, there was some authentic identification of their identity. And therefore, we were able to actually go back and trace the activities and seize those funds. Another interesting case is of ransomware payment. In this case, you can see VASP in one country that we were able to understand that some of the funds that were transferred to it, it was like 3 Bitcoins at that time, were related to a ransomware attack. We were following the channel of the funds, and at the end of the day, we saw that they were cashed out in a money service provider in another location, an entity which, from our perspective, provided a whole different look on this situation, because that was Iran. And all of a sudden, we realized that the ransom attack that was on an Israeli entity was not necessarily a pure criminal attack, but it might have been from different reasons. And once we had this piece of information, thanks to the financial intelligence, we were able to trace that. This is another interesting case of a work that was done by the Israeli authorities to actually being able to seize cryptocurrencies wallets that were used for Hamas funding. We were able to identify a few wallets, and this is the result of international cooperation with many other countries. We seized those wallets in many different remote countries that actually hosted those VASPs. All the point in orange are entities that were related to a different terrorist activities in the past, and we were able to seize a substantial amount of those funds by providing orders from relevant law authorities to all those cryptocurrencies platforms that held those assets. So there are many other activities. This is, for example, FinCEN's activity, the US with the pipeline attack that was also revealed, the colonial pipeline payment attack that was also being made possible to get those funds back, thanks to the crypto analysis that was provided, and the fact that for law enforcement authorities, many times these activities are not anonymous at all, but we have those information. When we're looking on the global review and the global situation, so I think that what's interesting is by now we have about 60 countries who are already in compliance with the regulation, who are doing and implementing that. 26 are in process of doing that, and 44 are still considering how to respond to those challenges. The countries that impose regime are regulating the VASP, and some of them have already imposed even sanctions on those VASPs when they were not in compliance with the regime. And we have 2,174 major VASP licensed and registered around the world. Of course, this is not enough, but we're seeing how unlicensed cryptocurrencies are being narrowed down more and more, and it is more complicated for them to actually work around the world because they are unregulated. And I think that it brings into the light the understanding that the entire cryptocurrency world is going to be divided into two. So we have those who are regulated, and the transactions that are going through their platforms were screened against the identity of the actors and screened against the typology of the transactions that they were conducted, and many other patterns that were conducted. On the other hand, we have the unregulated platforms. And when any sort of activity is being conducted there, in the future, perhaps now it's still possible, but in the near future, it's going to be almost impossible to transfer those funds into the legitimate financial system. And we are actually separating the world into these two different universes. The FATF is constantly checking if we are going in the right path or not. And indeed, we're not sure that this is sufficient and that this is effective enough. Indeed, we've seen that just recently, this is a report for a couple of months ago, we've seen that most jurisdictions do not have, let's say, for example, the travel rule requirements, and most VASP do not comply to that. I'm speaking about the component of actually having the entire information traveling with the currency by the VASP. But this is for a very important reason, because the FATF did not want to be the one who designed the entire architecture, the technological architecture of this solution. And therefore, we've asked the private sector to do that. And there are many initiatives. For example, I just chose one, the trust. You see that very substantial and major crypto companies are involved in that. And they are actually trying to design the solution. The solution that this particular initiative, the consortium of many companies, they call it Trust, Travel Rule, Universal Solution Technology. This solution, for example, focus on no central storage of personal data, proof of ownership and security and privacy standards. And they are all trying to actually solve the problem of how to be able to preserve the data of the users or of the customers and have it available to law enforcement authorities when relevant, but at the same time to preserve the privacy of their clients and not make it to be public information. So I think that we're at the final stages of actually adopting the travel rule, and we see that many solutions in the industry are at the final ages, and we think that during the past few months, they're going to be implemented, and then we will ask countries to implement them and make sure that this actually worked. But there are still many challenges in the implementation. Technological solutions are not easy. We need to be very creative in order to find those. Um, Many problems around unhosted wallet, the threshold that are pretty low, and there are some concerns about that. Data privacy and protection, and sunrise issues causing by the fact that in different countries it's being promoted in a different time, and therefore there are gaps in compliance. And while, let's say, in the US, it's relatively secure to conduct those businesses, it's possible that in another jurisdiction, the regulation has not been imposed yet, and therefore there are many problems with that. So to conclude, I think that, some of the problems that we've already envisioned, that the fact that not all countries have already imposed that, but I think that this is something that is going to be solved very soon. The FATF, as I mentioned in the beginning of my talk, is a very strong intergovernmental body, and countries that are not in compliance with those rules will be subject to sanctions, very severe sanctions. So this should be probably solved. However, it does not solve the problem that countries also must adopt the relevant capabilities to supervise, to investigate, and to seize funds when relevant. We also have the ongoing updates of the regime and standards, because all of the time there are new products, the NFT, the DeFi, the DAO. Each one of them is creating a whole new set of problems that we need to think creatively how to impose the traditional regulation to and change the relevant rules and balance. We have very different products that are peer-to-peer products, without intermediators, and we need to think how to impose regulation on them as well. And the licensing and registration regime, which is not going very as quick as we thought, and the travel rule implementation are only very few problems. So in order to conclude, I was trying to think, what can we learn from this case, and especially to see from this case, what can we learn to other cryptocurrencies regulation dilemmas in the future. And I think that it is being divided as a preliminary thought for four main subjects or areas. First is the policy and regulation. In my opinion, there is a lot of debate whether cryptocurrencies should be regulated or whether we are just interfering with this industry, and we should wait up until the industry will be more mature and only then to impose regulation. I think that regulation is necessary. I think that in financial market, it is impossible to take part and participate and to develop your business if you are not regulated, because you would suffer from a very severe de-risking by the large financial institutions, and they will have the excuse to conduct financial exclusion and take you out of business. I didn't mention that, but in Israel, while we were imposing the regulation on the sector, and we went hand in hand with the cryptocurrencies exchanges and platforms that begged us to do that. And at the same time, we've tried to fight very strongly against very conservative views of banking system, of banks that refuse to receive any, and I would like to emphasize, any funds that their origin was related to crypto, even if the entire risk management system actions were made. So this is the first thing. I think that some regulation is necessary. Yes, the regulation is necessary, but at the same time, it has to be very flexible, dynamic. It has to be conducted with consultation with the private sector, and to address the relevant distinction between legitimate and illegitimate use. When it provides us those abilities to differentiate between them, it actually creates a lot of value to all players. Another thing is technology. I think that many of the solutions are technology-based. First, we must make sure that we're doing technology by to design the technology that will be embedded with the relevant values that we want to promote. We can design the entire system to be AML or privacy by design compliance from the beginning. I've seen many companies that created wonderful solutions. However, those solutions would never ever be able to be in any sort of compliance with the logic and philosophy of AML regime, and therefore they will not be able at the end of the day to interact with the traditional financial system. And therefore this is something that you must implement in advance. And also technology can provide us excellent solution to preserve both transparency toward government and privacy toward the users and not share this information on blockchain. There are many ways to do that. There are some companies that are including the KYC information inside the crypto blockchain itself in a way that only when you have a few keys, you are able to de-encrypt that. And there are many other solutions that we can think of. I think that also technology can assist us to move forward and to not look only on know your customer, but know your transaction, and not to look on users anymore or customers, but on the transaction and the pattern of the transaction that is being used. And looking on the entire financial system from this perspective is actually change the entire system. I think that law enforcement authorities should develop better capabilities and expertise in order to cope up with those challenges and be able to use this technology in order to promote it. And last but not least, I think that the most important thing is that to encourage further development and uses. I think that we're just as I started my talk, we're at the beginning of these amazing developments, and we need to think how to use that in order to change the way that we are conducting business and to change the way that the economy works. If we continue to think on economy in the same glasses as we are wearing now on how to conduct transaction in the old-fashioned way, then I think that we are losing a lot of the advantages. And I hope, and I'm sure that in the near future, we will see a whole new set of products and development that will allow us to do a better use of this technology and also to solve problems in a different manner that does not exist now. And as I mentioned, now we're mainly dealing in order to solve current problems, but we should think about it in a different way and solve future problems. Thank you, and I'll be able to answer any questions.
So I will use the prerogative of the chair at times, but I see somebody jumping out of their seat back here.
Thank you very much, sir. This is a wonderful presentation, Dr. Wagman, and it's kind of a very warming knowledge that not for the lack of one, we have two thought leaders here from Israel. I was wondering, so a lot of the folks in the cyberspace and the technology space talk about how the lack of inclusivity is a major issue, particularly gender issues. I was wondering if you could share a little bit about your experience. My understanding is that you are the Israeli money sheriff, which is supposed to be this very gendered role. And I understand that you ran IMPA, and I'd love to also hear how was your experience implementing in practice these things. Thank you very much.
Thank you for this question. Well, so in terms of inclusion and gender inclusion, I think that this is what you're referring to. Yes, I'm very proud I used to be the head of a financial intelligence unit. It's a very male-oriented world, all the security services and so forth environment. And we had about 70% women in our organization, and about 72? Yes, actually 75%, and 70% in our entire management team. And I found that women were excellent analysts. I think that they had a wonderful ability to collect all the data and to put, if you remember the graph that I had at the beginning, to put everything in order. So they have a great ability to do that. And in terms of heading IMPA, indeed, my authority, IMPA was recognized by the FATF to have the highest possible effectiveness rating in an evaluation that was conducted approximately over 2 years on the entire Israeli system. Similar is being conducted in many other countries. And we were rated about the top 3 FIUs worldwide. It's a lot of hard work, but a lot of discussion with the private sector, because I think that money laundering it's a phenomenon that started mainly on criminal words, but now it's mainly a financial regulation story. And you need to know how to play with the industry in order to make sure that the information that you're getting of a high quality, and then you can produce excellent results with the law enforcement community and fulfill the vision of the FATF of the follow the money.
Very different line of questioning, but how do you respond to criticisms that blockchain is just a technology without a purpose, right? So you cited the cell phone in the beginning of your talk but the way I think of a cell phone being designed was to solve the problem of conducting phone calls while on the move, right? Not tied to a landline. How is blockchain making financial transactions better, right? You talked, especially at the end, about different problems that you think it can solve. What are they today?
Thank you so much. Excellent questions. I indeed didn't highlight that enough. I think that blockchain technology has a lot to offer. For now, it's serving mainly to reduce costs and to cut out intermediaries and allow people to go out of the central financial banking system into a different world. However, this is very limited, and I think that the smart contracts that are embedded at the NFTs, the DeFi, those entire products are going to actually allow us to think differently on financial transactions without intermediaries and in a lot of transparency. Let's say that you can let's say that you are donating funds and you want to make sure that at the end of the day, they will reach the relevant purpose and persons. You can actually transfer those with those smart contracts embedded into the system and to know at the end of the day where they were spread and what happened with them. Or you can see governmental spread of expenses, or you could integrate conditions before certain actions are being conducted with your NFT or any other product. So I think that it is much more than just transferring funds. It's going to change the balance of powers because it's going to put outside or to put into more to the side the large banks that are currently controlling most of financial transactions. So it will give much more power to citizens, much more decentralized mechanism that will provide additional value and much more transparency and products through those smart contracts.
Already delivering that value, or is it one of those situations where you think that is at the end state of blockchain?
I think that it started. We see the beginning of that. We see that the DeFi technology, we see smart contracts, we see how people are investing funds in a decentralized mechanism with lower cost. It's happening already on ground. We see NFT develops. For now, unfortunately, I think that it is mostly being used to launder money, the NFT, but I'm very optimistic because I think that this technology has a lot to offer. So it's a mixture. And I would like to also emphasize that up until recently, it was extremely difficult to cash out your cryptocurrencies, the traditional cryptocurrencies, the Bitcoin investment that you made in traditional financial institution. Only now, when many countries or more and more countries are implementing the regulation and their financial institution are willing to accept that, people can actually meet or cash out their funds. So we're at the beginning of the way, but looking forward, I'm sure it will take time, but we will get there eventually. And this is why regulation is extremely important, to put aside the burdens that are on the way right now for rapid development.
So I'm going to exercise my prerogative, and then I'll find both of you here in a second. So one of the issues here that I struggle with a bit is, on the one hand, all these transactions that occur across blockchain are both immutable and transparent. And so like you were giving an example where you could go back in history, once you knew the end state when they tried to convert a cryptocurrency to a fiat currency, you could see the identifiers, and then you could trace it back for the whole history of the set of transactions, which is great. It's also a massive surveillance machine, right? And it has huge potential for abuse. So who thinks about, or is anybody thinking about the trade-off between what's appropriate in terms of protecting the privacy of data versus looking at that data because it's involved in an illegal transaction?
This is a wonderful question indeed. So I believe that the philosophy of designing the entire infrastructure and the AMLCFT requirement should be very focused on preserving privacy. And I would like to highlight that we are not asking actually entities to or VASP to provide government with all this information. The case should be that only when there is a particular suspicious, then there should be some sort of mechanism. It could be as it is now that there is a reporting mechanism that the VASP is reporting the government and indicating suspicious activities. Which this is the situation in the financial system. That was the balance that was adopted with respect to the financial system. So if I'm looking back on the entire financial system, all financial activities is being kept private, other than transactions that are suspicious. So this is the same mechanism. However, we could change even that, and due to technology, to create mechanisms that allow to reveal this information within a smart contract or encryption or special keys that only when you get, let's say, an order from a judge or something else, then you can combine those keys and to actually see the information, because you can use hash technology that will provide you hits, but you won't be able to see that. So it's actually add another layer of privacy in comparison to what exists now in global economy.
Thanks, Professor. Thank you so much for being here. This was a great talk. I used to work at the FIU in Peru, and I really appreciate all the conversations around this because I think there's a lot of excitement around VASPs in general. And while there should be, there also needs to be a huge push for regulation and supervision. So having said that, I don't know if I missed this in your talk, but I was wondering if there's a specific path for regulation for a regulatory entity within countries. Is there a suggestion for that, or can countries just go and potentially either create that, such as we do with financial institutions, or do they report directly to the FIU in each country? And following up on that, given that you mentioned the increase in STRs overall, particularly with VASP right now, how do you tackle the concern of lack of human and financial resources because of lack of awareness of the importance of regulatory and supervising bodies? Thank you.
Thank you very much. So there is a discussion, ongoing discussion internationally, whether there should be a designated supervisor to cryptocurrencies. As of now, most countries chose the path of just looking at that as an additional, in another product in the basket of existing regulators, and to ask them to provide the special expertise that are required to deal with that. So most countries did not, to the extent that I know, did not establish a whole new regulatory organization. However, I do perceive that in the future, not the very near one, the specialties that will be required to this product may require that. May require designated regulators. With respect to investing resources in the field, as I say, in financial enforcement, it's very easy to know if you're on the spot, if you're good or not. It depends on how much proceeds you are able to seize from the criminals. In our model, for example, my budget was relayed on the amounts of funds that we were able to seize from criminals. So we were very successful in that, and I had very large budgets in order to develop future capabilities. But yes, countries, if you want to fight crime, countries and government need to put their hands in the pocket and to spend some funds, because otherwise you'll be left way, way behind and you will not get anywhere, and you'll just impose very expensive costs on the private sector without being able to effectively use that. And we see that happens a lot.
I'm going to follow up on that a little bit. There is obviously a major global governance question here, because as you pointed out, there are no borders. Things are all going across borders. You're dependent on nation states to kind of decide they're going to, for example, the travel rule implementation. The nation state has to implement that. And are you going to get pockets of basically countries who choose to opt out of the system and become dark categories, if you will, where illegal transactions can take place? And in particular, I tried to look at your chart and I couldn't read it quite quickly enough, but I noticed that Russia was, for example, a cooperating council country, that China wasn't on the list, and I couldn't see where Iran was.
Okay, so indeed, financial economy, as I used to say, it's like a waterbed. If someone, and it's exactly as you mentioned, that if someone is the weakest link, then all criminals from around the world will go there and actually use those services. This is why the FATF network was established exactly with this philosophy that we must enforce all countries to act exactly in the same level, and countries who are not in compliance with that are going to suffer from severe sanctions. And it's actually the private sector is going to suffer from those sanctions because they are being considered blacklisted and on high risk. Now, with respect to general global regime, we have concerns. The FATF published a report recently saying that although many countries have adopted the technical aspects of the global regulation, namely they have adopted the rules and the regulation that is required about the general AMLCFT regime, they are not implementing that efficiently. And if they are not doing that efficiently enough, then we are remaining in the same old world. And this is generally speaking about the financial world and not necessarily on cryptocurrencies. Adding to that, the cryptocurrencies becomes even more complicated. This is why we must ensure that all countries are taking a similar approach, and countries that are not doing that are going to be excluded from the system.
Thank you. I find this fascinating, and it's a bit of a balance between the professor's points around rights, but also anti-money laundering and how pervasive it is. Looking forward to predictable advancements in AI, algorithmic examination, and computing power, particularly like if we look out, say, 10 years with quantum computing starting to practically manifest. I'm wondering if you could talk to where you see those evolutions taking this technology and the ability not only to be prospective, but also retrospective.
Excellent question. I think that it goes hand in hand along with the cryptocurrency blockchain technology, because it actually works on similar environments. And when we are working with data which is machine readable, and cryptocurrencies transactions are mostly like that, unlike traditional transaction, when on those transactions, many times you'll get scripts that are being written by a bank officer, and every system is different, and it's not machine readable many times. Here in cryptocurrencies world, everything usually is machine readable, and therefore we can actually take use of AI, machine learning, and go into the framework of not necessarily need to do the exact same actions that we're in supervision that we're doing now. For example, we will not need to do know your client, but know your transaction, and then to look only on the patterns of the transaction. Now, I can tell you that, I mean, without having the machine learning and AI capabilities, that you can look on the way that the blockchain transaction is behaving, and you can tell if that's most likely a criminal or a normative person. It just behaves differently. There are different typologies. So definitely, I think that this is going to be the next, or it is actually already being implemented as the next way to handle money laundering. And I will also add that in my authority, we've actually embedded machine learning technologies into our system. It was a lot of time. It took us a lot of time to make sure that all the data that we have is machine readable. But once we have that, the machine will tell us who's the next large professional money launderer is. And it saves a lot of money and cost and everything. And I'm going back to the previous question of budget. So if you have budget, you could do that.
Great presentation, Shlomit. Great to see you. I want to ask about DeFi. We know how to impose a licensing and supervision regime on a corporate entity that's a VASP. But increasingly, we have the DeFi world, autonomous software protocols on which people are trading, lending, borrowing. So what's the attachment point? We could rely on the network effect, like you said, but is that really sufficient? And particularly, shouldn't the attachment point be validators, miners? They will obviously push back if we try to do that, but why shouldn't, I mean, insofar as transactions have to be booked in some way by some process, is that the proper attachment point, or is there a better one for AML, CFT, tax reporting, and so forth?
Okay, I think that there were 3 questions in one. I'll try to answer all of them. First, with DeFi, it is a challenge. It's a challenge, but there are advantages. DeFi is completely decentralized, and we don't have the intermediaries to do the supervision for us, countries, regulators. Unlike, by the way, NFTs, because in NFTs, we see that people are working with centralized platform for a variety of reasons. If you're interested, I can elaborate about that. But in NFTs, it's actually easier. So in DeFi, we haven't solved this problem yet. The FATF and many other experts are sitting in order to see how to do that. A few potential directions that I want to suggest. First is to remember that at DeFi, because we're not working with cryptocurrency platform, we actually can't see on the blockchain all transactions. Sometimes it's called over the counter. There are many or inside the platform. When you have a large cryptocurrency platforms, they are conducting transaction internally, and it's not transparent from the outside. So we are not sure who did which transaction. We see that many times in terrorism financing cases, which is lead to many confusions, but I put it aside. So in DeFi, we have the opportunity of actually seeing the entire transactions because they are associated to a certain wallet, and you can trace that in the old traditional way. We don't have the sensors. That's a problem, and we need to think on how to solve that. The idea that you suggested on going into the miners is appealing. However, I'm not sure if miners have enough information in order to actually conduct the KYC or all other supervision that is required. By the way, when miners are trying to cash out the funds that they have produced by mining the currencies, because we've seen some criminals saying that they've got the original funds from mining, we actually give directions to financial institutions to actually look and see if they have mining operations, if they have electricity bills, if they have the capability and so forth. But miners are only at the beginning, at the early spot, and they don't have enough information to go forward. But if we will implement KYC embedded in the coin, perhaps that would be, oh, okay. So that might be a very interesting solution. Yes. Yeah. And there are a couple of companies that are already doing that. This is a fascinating solution. And I think that when we're talking about AML by design and to build the entire infrastructure to be in compliance with more broader consideration, this is definitely the right way to go. It's a great solution.
All right, we're close to the reaching hour, but I want to.
Thanks, Professor. Just my follow-up regarding the weakest link or the analogy to a waterbed. Do you envision more countries going into the blacklist or the gray list as a result of not complying with recommendations on VASPs? And if so, how long are you giving them to kind of catch up on regulation and implementation of this?
Yes, definitely. The answer is yes, because the requirements are going to be entered into the ongoing round of evaluation. So I think that very soon we'll be able to do that. Actually, there are already countries that I don't want to mention specific names, but countries who are not in compliance got rated about that, and they might be in the process of getting into the blacklist as part of the entire package of their system. But it is in effect already.
That I would like to say thank you to Shlomit.
Thank you.
And thank you all for coming. Hopefully you found it interesting. I certainly did.